Hello everyone, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, as well as one of the founding members of the Dividend Kings. And this is part 2 of my article on forecasting future business results as the key to long-term investment success. I will be posting this publicly, but I'll also be including this in the Dividend Kings library on how to invest better. So for those of you who are Dividend King subscribers, you can watch for that. Now what I'm going to do here, I'm not recommending any stock. I'm not talking about a specific stock, although I will be utilizing 3M as my example. What I'm really doing here is trying to illustrate to you how I would conduct a comprehensive due diligence process. So I'm going to kind of go through what I discussed in both part 1 and part 2. Now for starters, I like to review a company's past history. So here I've got adjusted operating earnings of 3M Corporation. A couple of things I want you to notice. This company has historically commanded a premium multiple, which is your valuation reference line. To corroborate that is the blue line. Now, coming out of the recession, it did trade along the orange line for quite some time. But generally, as an operating company, this is a AA rated blue chip dividend aristocrat. It's really an extremely high quality company, and one that I would always feel comfortable putting into a portfolio if I could find it at the right valuation. So we can see that it got significantly overvalued back in 2016 and 17. It has now come back into what I would call better alignment with fair value going forward. Now, I learned this from the history. I'm also going to look, since it's a dividend growth stock and a dividend aristocrat, I'm also looking at it from a standpoint of operating cash flow as another valuation metric. And here I'm looking at two things. Number one is it's trading at a very attractive valuation relative to operating cash flow growth. But the second thing is that their dividend is also very well covered. They have more than ample operating cash flow. And then, of course, when I'm still looking at dividend coverage, I also like to look at free cash flow to ascertain whether or not the company's covering their dividend with free cash flow. And when I'm doing free cash flow, I'm not so much concerned with price. So bottom line is, historically, this company really has all the attributes that I'm looking for. It's got consistent growth. It's AA rated. It's got a superb dividend record. When I look at its long-term performance, and I'm going to look at it from EBIT here, I want you to notice it was attractively valued, and it's now attractively valued again. When I look at its long-term performance, it's dramatically outperformed the S&P over this particular long-term time frame. It averages about just under 6% growth. It's really a blue chip dividend growth stock, offers a 3.59% yield. But in my first article, I talked about trusting analyst estimates. So, I'm looking at forecasting here. This is the 3 to 5 year trend line. The analysts are expecting about the same, 5.6%, very consistent with what the company has historically averaged. So that seems plausible to me. Now, this is on EBITDA, I want you to note that I'm looking at. When I look at near-term forecasts, we're looking at a down year this year as far as EBITDA is concerned, followed by 6% and then 4%. But this would give me a solid 8 or 9% rate of return at the midpoint. If I go in the upper end of my valuation quarter, a little higher. If I look at the normal multiple, which has been higher for EBITDA, I could see rates of return in the double-digit range. And I could do this for all these metrics. But the point is, this company also has a superb analyst scorecard. I'm not going to spend a lot of time on that other than to say that this company has generally exceeded analyst estimates historically. So it's a very conservative company. It's well managed. It has a very consistent operating history, an occasional down year, but only mildly so. You could see that price has followed the business results over time. That would be true in earnings as well as sales. This is the price to sales graph. So now I've got a stock that is worthy of me spending more time to go ahead and embark on a more comprehensive research and due diligence process, because what I'm really trying to do is understand the business. Now, what I like to do, I designed my FastGraphs tool for my personal use with some external links that are actually very relevant to me, at least, because I do subscribe to the Wall Street Journal. I also subscribe to Morningstar, and I also subscribe to Seeking Alpha. And then I've also got Yahoo and others. So I always start out by going to my external links and going directly into the company's website. Now, what I do when I go into a company's website is I look for what I can learn about the company's business, what it does. So if I go down here on their landing page, I can see businesses. I know that 3M is involved in all these different different businesses. They've got a consumer business that goes into personal health, cleaning and protecting, and so on. And then I can also go down here and look at the 3M brands. Now, I'd spend quite a bit of time on this page. I'd look at all the other brands that the company offers and, just try to get a feeling for what the company does as an operating business. So I'd spend quite a bit of time here. I'm not going to bore you with that here, but I would get into looking at this company quite extensively, just trying to figure out, what they do, what business they are in. I might, if there was a brand that I didn't understand, I might want to go ahead and dig deeper into that brand and try to figure out what 3M sells to service that brand. Okay. So once I've done that and spend my time doing that, and I've got a good idea of what business the company's in, then I'm usually going to go into the investor relations department. Now, again, I'm kind of just brushing over this quickly. I can look here at their history. I can look at their leadership team. I can look at awards they've won. I can look at where their businesses, their plants are located. I could look at their research and development. There's a lot of information on a website like this that I could learn about the company. But once I've kind of done that, I really like to go into the investor relations department. And what I'm doing once I go into here, I'm looking for conferences. I'm looking to see if there's any presentations that the company has done. So I'll look for investor presentations. I'll click in here, go into investor presentations. And what I'll do is I'll try to find one where I've got some slide decks, because as I mentioned in, I think both articles actually, both written part 1 and 2, that you will see the same presentation here that the analysts who are making the forecasts that I talked about in part 1 are seeing. So I'm going to go in here and I'm going to be able to look at their slide deck. This is obviously company propaganda, if you will, but it's also information. It tells me what sales were. It tells me what my earnings have been. It tells me what my returns and invested capital are. It gives me an overall summary of the health of the business. It introduces me to the board of directors and so on. So I can, go through this slide presentation and I can essentially get a good feel for what the company's doing. Again, I don't spend a great deal of time in these, but I spend perhaps more time than some people would imagine. I'm trying to understand the business as best I can. Of course, ultimately, when I'm here in investor presentations and investor relations, my primary area I want to go to is the financials. I'm going to look at the financial reports, the 10Ks, the 10Qs, and I'm going to begin reading them. Now, this is all happening after I've made the decision that I want to know more about this company. I'm going to move on now and go back to my external links here. I've gone through the company website. Now, once I've done that, I start looking for research. I look for outside information that can give me some insight. So one place that I like to go to, especially for high-quality companies like 3M, I like to go to Morningstar. I'm a subscriber to Morningstar. So I'll go in here and I'll look for these analyst reports. And what these do, these give me a great deal of insight into the company. They'll talk about things like their view of fair value, the business strategy and the outlook. They'll talk about their moat, their fair value and profit drivers, as I mentioned, the risks and uncertainty, stewardship. So I'll go through here and, try to learn as much as I can of what a leading research firm like Morningstar thinks about 3M going forward. It becomes part of my process, if you will. In addition to Morningstar, I also subscribe to Zacks. And so, I'll go into Zacks and I'll see what the analyst reports on Zacks are. I find some very interesting information here. I'll get information about what the analysts at Zacks think the company is going to do. Of course, I get a simple summary, but that's not what I'm interested in. I'm interested in the overview of the business, the different segments, and what they think is happening in those segments. One thing I like about Zacks, they give me reasons to buy and reasons to sell. So I get some news, latest earnings reports, and so on. So I'm gathering information on the company now. I kind of understand what business they're in by looking at their website. I've read some research. I might go into the Wall Street. I always go into the Wall Street Journal. I shouldn't say I might. And I'll look here and see if there's anything that is important, like this acquisition of Facility Inc. I'll go ahead and drill down. I'll click on that and go ahead and read about that, see what that's all about. Of course, I'm going to check the other fundamental things. I like looking at this because it tells me who their competitors are, so I can run fast graphs and look at how the company stands up into their competition. I of course would go into somewhere like Seeking Alpha, and I'm again a subscriber here, so I can go into Seeking Alpha and I can look at things like Seeking Alpha's view of their dividends, how they score them. I can look at their dividend yield. All of this is about getting to know the company better and trying to understand it better. Because my ultimate goal is that I know that if I can understand the forecast, I can run what-if scenarios. If I believe these forecasts are reasonably accurate based on the company's valuation, I can just run some real quick calculations on what my future performance might be. And by the way, I never ever make an investment in any stock without at least having an objective, an idea of what I think the company can make me specifically. In other words, I never just buy a stock and hope it goes up. But I go through this due diligence because this is all about being an investor. It's not about playing the market or trying to guess where the price is going to go. It's trying to guess where the orange lines on these graphs, where the business is going to go, how much growth they're going to generate, and then what that growth could mean to me as an investor if I buy it at the current valuation. I don't want to do any of this if the stock is overvalued like 3M was, back at the beginning of 2018. But now that the stock is trading at a reasonable valuation, I'm quite interested in doing that. So this may seem complicated. I find it actually fun. I go into other sites. I'll look at, Yahoo and look at other analyst estimates. I'm just kind of giving you an overview of the process. And, sometimes I go real deep and because I feel like I'm not convinced or I still need to understand the business better. Other times this process can be very quick. But there is no shortcuts in investing, in my opinion. If you really want to make a good long-term investment decision, you need to understand the businesses you're investing in. I think forecasting some type of growth, at least the direction of growth, is the key to that. So anyway, this has been Chuck Carnevale saying, hope you enjoyed this video on how I conduct my own research and due diligence. It's a process. Again, this wasn't about 3M as much as it was about the process I go through once I identify a company that I think is attractively valued. If you like this video, don't forget to hit our subscribe button. And you also might want to take a look at the Dividend Kings on Seeking Alpha. There's a lot of help for those that are interested in building dividend growth portfolios. Anyway, thanks for watching. Talk to you again real soon.